They've built a company where they help people invest in alternative assets and specifically into sports.
There's no way I would have ever played in the league, but you couldn't have possibly told me that as a kid.
And he says you can get started for as little as $500. So it's not just high institutional investors.
I started working with pro teams. I absolutely own the fact that I had some phenomenal people surrounding me where they opened doors for me.
Is it athletes or the typical normal person, every average day Joe, the access to alternative investments?
I went into the founder's role at that part, and I'll openly say that I had a good exit as well as I've had to bankrupt companies, so both sides of the spectrum, and you learn.
Welcome back to the Wealth Juice podcast. As always, it's your boys Ryan and Corey here with another episode. Today we had a really fun episode. We got to interview Nick Edwards. He's a venture capitalist and seasoned entrepreneur with over $1 billion in managed assets. He's the co-founder of Champion Venture Partners. His business partner is Marcus Colston from the New Orleans Saints. And Nick himself is a former pro MMA athlete. And they've built a company where they help people invest in alternative assets and specifically into sports. And they talked about a bunch of different things where you can actually invest in the real estate around stadiums, invest in stadiums themselves, concessions, apparel brands and things. And they've built a fund where the average consumer can invest. They also have another fund for accredited investors. And we talk a lot on our show about real estate, right? Investing. You've probably heard us talk about real estate syndications and funds that we've been involved in. This episode, we get to talk about how you can invest in sports in a fund type vehicle. So super fun for guys and gals that love sports, love football, love MMA, love hockey, all of it, right? We talked about it all in the episode. Nick kind of brought us through his career of like when it was coming to an end, how he had to pivot and, what was he going to be after ending a career as a pro athlete? And it's so interesting. We've talked to a couple NFL guys too. And I always have the question, well, did someone help you with your money along the way? And like, do you guys have an arm where you're helping people with money versus just investing in the product? And, they have an arm through their company where they provide financial literacy and education to people that are looking to build generational wealth through their families. And so the last thing I'll say is it's so interesting when we started to realize, or we come to realize through Nick, professional athlete, they make it to the league. NFL, for example, not for long. Like the average is 2 to 3 years in that league or in a pro league in another sport as well. And so people turn into having their life, you're at the pinnacle of things and you have a whole team around you. And then you go, the next day when you're done or you're like, or you're released, you have to go back to the real world, right? And you have to build things out again and you don't have all those people in your corner again. So they do a great job of bridging the gap and helping people, get accustomed to the everyday life, if you will, and find ways to still grow their money without them having a massive paycheck coming in every month. And so overall, for me, as just a fan of pro athletes and high performers, I love this episode and getting to know Nick and just kind of, learning how his brain works was really cool.
Yeah, most people think that the investing in franchises, sports franchises, is just for the ultra wealthy. Like you hear that Will Smith owns a percentage of the 76ers. Like, I don't know if actually I don't think he does anymore, but he did for a while. So like, Nick is owning a percentages of franchises, of the real estate around franchises, of the food and beverage, of the unique properties in sports to the average person. And he says you can get started for as little as $500. So it's not just high institutional investors or previous athletes. It's the everyday person. And that's what we wanted to highlight. We always talk about real estate on the show, and we're going to continue to do so. But I think it's very cool to just bring in some alternative thoughts, alternative investments, and always talk to high performing people. And Nick certainly fits that mold. So without further ado, let's bring him in.
Nick, officially welcome to the Wealth Juice podcast. We are so excited to have you on the show, man. We were talking a little bit pre-recording. You have quite the track record, and this is going to be a fun episode for us. So we're excited to share your story. Appreciate you joining us, and excited for a fun episode today.
Thank you for having me. Really appreciate it.
Absolutely, man. So take us back to pre-entrepreneurship. Where are you from? And kind of take us through the evolution of your professional career to where you are today.
Sure. Oh man, we're going like full kindergarten cop. Who's your daddy and what does he do? Huh? So
you have to go that far back, dude, but maybe hit us with like right around college, if you went to college, and then take us from there.
Yeah. So I grew up in Minnesota, went to college at NDSU. I played football. I tore my ACL, which completely killed the NFL career dream. And what's funny too now is I'm 6'2", and I was a lot smaller back then. I've gained a lot of weight since college. So there's no way I would have ever played in the league, but you couldn't have possibly told me that as a kid. once I was done with college, I actually tore my ACL, like I said. Had a high school wrestling coach that said, you know what, you should really try MMA. You'd be good at it. I'm like, no, absolutely not. I don't want to get hit in the face. That sounds terrible. I went to one practice and I got completely hooked, and that was fantastic, and had a very good career in MMA. And then transitioning out of MMA, I kind of then spread the wings into entrepreneurship.
Nick, I'm very curious where physiology comes into play in your story. I know that you worked with a number of professional sports teams, and so I'm curious at what point. And we love talking to athletes because we think there's such a parallel between athletics and business, and just the competition and that drive and everything. But physiology stands out for me in terms of what you've done. So how did that come into play in your life? And if you could explain the difference between psychology and physiology, and just because for us dummies over here.
Sure, no problem. So, where actually really where it came out of is the fact that, I really wanted to, perform and work in athletics. And when you're in MMA, your career is very finite. You literally can't do that to your body forever. So, it's interesting that the backgrounds that people come from for the sport and what they do. And for me, I knew very early that I couldn't do it professionally forever. So it's how do I transition out of sport? So even while competing is transitioning out, what should I do? So finished my degree in physiology. So physiology is like a step up. It's kind of like you're bridging the gap between your sports science and your medical folks at a team. So it's really that hone in on metabolism, exercise science, and pulling it all together for more of the metabolic side of sports. And so me, myself being an athlete, I'm like, this is a perfect transition. And so after tearing my knee, I wanted to figure out how does that happen? How can I help other athletes? And so I started that transition out of sport. And so after my MMA career was done, started working with pro teams. I absolutely own the fact that I had some phenomenal people like surrounding me where they opened doors for me, and, kind of always give thanks and try and open up doors for others because of that. And so now, I worked with NFL, NHL teams. Most recently, so I'm Denver based now. I worked with the Avalanche, the Nuggets, and the Rapids here in Denver. And so that was great. Went with them from when they were, just starting off, kind of at the lower end of the spectrum, all the way through championships. So it's pretty great.
I love it, man. You kind of did like the reverse of what a lot of people do in business in a way, or at least can parallel it to me. Like since I got into my 30s, I'm so much more into what I'm putting in my body, how I'm treating it, metabolic health, taking creatine and vitamins, and making sure I'm at the gym 5 days. Like I'm doing all that as like, oh, okay, this is going to help me in business, right?
Yeah.
In reverse. And then you kind of went, well, like this is my life before, and I bet it did help you in business. So I'm curious about the transition from working for the NFL teams, unless that was part of the entrepreneurial journey. Like, was this your own company that you owned, or like, how did that transition from, MMA working, for or with NFL, NBA, NHL teams, and then to like the entrepreneurial side of your ventures?
So that's actually perfect analogy, because if, a lot of folks, like you said, in their 30s, they start to pay attention, like, how do I lift differently? I'm not lifting for mass, I'm lifting for range of motion. So for me, it was actually working with teams and seeing not only what I got exposed to, but all the cool tech, the stuff that nobody else gets to see. We'll say that mere mortals get to see it, right? So like it was one of those where, how do we commercialize this? How do we get this out to the masses? So for me, it was that, you're right, it was kind of an opposite transition where I'm like, I'm already doing this. Now, how do we scale it? What makes this stuff scalable? And so when working with pro teams, I clung pretty hard to a lot of the medical staff. And so traditionally, you'll see orthopedic surgeons be a more innovative group in sports medicine. So worked really closely with orthopedic surgeons, helped them commercialize different products, things that we were seeing. I went into the founder's role at that part, and I'll openly say that I had a good exit as well as I've had to bankrupt companies. So both sides of the spectrum, and you learn, a massive amount more than your failures than you do your wins. But of course, that kind of snowballed. So after being in the founder seat, really started to gain, more networking presence with people who are looking to do more pieces. So whether that's commercialize intellectual property to help clinical workflows, clinics then kind of flowed into more sports-oriented ventures. That then spawns into, what's happening to the real estate around it, whether that's stadiums, short-term rentals, medical real estate, multifamily. It all connects kind of in that nexus of medicine, sports, and hospitality. And so that's kind of where everything I funneled my entrepreneurship into.
I have one question on this, just for people that are listening that are like, whoa, this is like high level stuff for me. I'm just saying, like, I think real estate's pretty basic. So can you tell it to us like we're kindergartners? Like, what exactly do you do? And I'm thinking about, I have a lot of questions based on your MMA career, and we can go down that path as well. But I think that's just so fun to talk about. And it's just the parallels we talked about between business and high performers in sports. It's amazing. And it's so in sync. But let's talk about just what you do on a daily basis between investing, consulting, real estate. There's so many different things. How do you put it into a box and like say, hey, Nick Edwards, who are you and what do you do?
Really it comes down to doing good things and the money will follow. So it doesn't have to be the most novel idea. It doesn't have to be this, massive boil the ocean, make another Google, make another Facebook. The reality is it's just do 1% difference in anything that's out there and you can scale it, right? So for me, I love working with just individuals on a day-to-day basis, kind of helping them, kind of as you said, consulting, coaching, really helping. I would guess, I hate the word democratize, but really making it so that everybody has access, so it's a ubiquitous way to kind of take from, hey, we all start at the same spot. How do we build generational wealth? How do we have access to things together? And how do we grow it all together? And so I think the more people are exposed to that and have access to it, that's what I do on a day-to-day basis, is provide access.
Very cool. So you're providing, is it athletes or the typical normal person, every average day Joe, the access to alternative investments? Is that the deal? Like, give me like the little background on CVP.
That is the deal. But you actually, without knowing it, hit it right on the head there, because a lot of people, when they look at athletes, they automatically see, this high achiever, this high performer, that's their hero. You grow up watching people play. And here's what's the dark side of it that people don't know. When you're an athlete, you're giving your body, you're giving your life to that. And most people don't know this, but the average length in sport is 2.5, 3 years. So what happens after that time is you're done. I mean, it's gone. So, unless you're literally in the top 1%, using that again, unless you're in the top 1% of achievers, people aren't going to hear from you. Nobody knows who the left tackle of the Browns was 10 years ago. Well, they maybe do. But the point is, they disappeared, right? And so the reason for that is because you go from this accredited investor status, you sign a huge contract, you have an entourage of people around you, things are really good. If you, let's say, don't choose to transition out of sport, like you don't retire, you get injured, you get cut, right? That's it that day. Your agent is gone, your tribe was gone that you're in the locker room with, it's all done that day. So you start to go from this accredited investor status to slowly to a non-accreditation status. So you're a retail investor, same as everybody else. That same person who was making multi-millions in the contract and then ended quickly is at the same spot as a mom who has 3 kids who's chauffeuring them to baseball every day and paying $500 for a baseball bat versus investing, right? So it's literally, by providing something for athletes, is the exact same as providing for retail investors, the average person who's out there.
Got it, man. So I'm curious about the opportunities and the best opportunities to invest in sports, because when we talk to people, this is kind of like opening up a new portal for us. Like, for example, I never thought that it would be possible to invest in sports. My thought is like, I invest in the stock market, I invest in real estate, which is what we love. That's how you, as the average person, which I would consider, at least me and Ryan to be part of the average people. We're not Steve Jobs. We didn't invent anything crazy. We're investing in real estate. We're building wealth, and we're teaching others how to do it. What are the opportunities to invest in sports, and how does that even work?
So traditionally, it hasn't worked. People have been left out of the room for meaningful ownership for a long time. So, putting on my champion venture partners hat, that's what we do, is we're providing access for everybody to be able to invest and have access to the asset class of sports. Taking a step back, though, I'd say the predominant reason why people feel that is because when you say investing in sports, everybody thinks of the big 5. You think of, I'm going to own an NFL team, an NHL team, an NBA team, and that is so not that. That's a vanity item. It's a badge of honor. It's your ultra high net worth people that are going to be funneled into that. The reality is the sports asset class is massive. So you have an emerging team and league. All right. Well, how about the short-term rentals around that? How about the stadium itself? How about the food and bev and the restaurants around it? The real estate for each one of those. Then start talking about the in-seat food and bev, the ticketing, the sports tech, all the way down to the CPG products, what's sold in there. And actually, even to the point of, we have a company that we're looking at right now that does the plumbing for stadiums. I mean, like, there's the sports asset class is so big. There are many ways to get in, but nobody pays attention to it. And oddly enough, that bucket, other than the teams, has outperformed the markets for the past 60 years.
This is so interesting, man. I love it. I'm glad we got kind of in the weeds now, because I wasn't sure. We were doing some research, and it's hard to take a grasp on exactly what it is, because we're so on the daily basis focused on real estate. And so what I'm gathering here, you mentioned accredited investor, retail investor, right? So when we typically talk, and this is just for listeners to catch you up, like when you talk about an accredited investor, someone that has $1 million in net worth or 200K that they've net the last 2 years in a row, or like they're expected to for the last 2 years. I'm fast forwarding through that, but you think about, okay, you can now have the opportunity to invest in specific syndications, right? You have to be an accredited investor to even get into them. For you guys, you're offering, it seems like, the same opportunity for pooling people together, pooling cash together to invest in teams, to invest in concessions, to invest in the plumbing company. So can you break down, I guess, how it would work in the lens of the parallel? On one side, you have the syndication model where it's mostly in real estate, multifamily syndications, like value add. You go find a distressed property, you fix it up, and then you're either going to refi or sell it in 5 to 7 years, roughly. For you guys, if you could paint the picture on like how exactly it works and how you find the different businesses or the classes of asset that you can put within a fund, if it is a fund, and just kind of break it down for maybe the average person listening, saying like, how the heck would this even work and what's it comprised of?
Yeah. So oddly enough, it's literally the exact same. The difference is you need to know the business of sport if you want to be sport specific versus real estate specific. So for instance, a seasoned real estate investor isn't going to one day be like, I'm going to go pop up a bunch of hotels. You know, they might start off with some STRs. They may start with multifamily. There's going to be kind of a trajectory to get there. Same thing. You don't wake up one day and say, I'm going to go buy a team. No. You got to know the business of sport, and you got to be latched onto the operators to know how to do a turnaround, like you said, to be able to make that happen. The syndication model, rule, and everything still applies. The difference here is that until recently, most sports assets, again, people are thinking of the teams. And to be able to play there, you need to be able to write, $100 million, $500 million check to pay to play, right? Versus if you start looking at the entire ecosystem, you could say, hey, there's going to be a new cricket team down in, I don't know, pick a spot, down in Georgia. If you're going to be a new cricket team in Georgia, great. What's happening for the real estate around there? Can we pick up some short-term rentals that are going to cash flow alongside this? How about we pop up a restaurant that's going to be adjacent to it? So sports adjacencies are just as big as the sports teams themselves. And so when you're building this together, what I've seen in the industry is there are syndications where people are going to come together. Typically, it takes a form of an SPV where there's going to be a lead investor who's a massive check writer to kind of start it off, and then they'll pass the hat from there. Another option is to participate in things in the market that touch sports, so think of like some publicly traded companies that happen to invest in sports or sports like equipment, because there are a lot of those. And then finally, there are funds like ours. Most funds are going to be on, again, the accredited investor side. So they're going to be, you have to be someone who can write $1 million check. This is going to be high risk versus where we're aiming. We have something called an interval fund. Interval fund is a 40-act fund. So this is one I challenge everyone to kind of do some research on. It's quite interesting. The way that it works is it's basically a private version of kind of like I shouldn't say it that way. What it is it's basically like it's a public way to get individuals to come into a fund that don't have the same accredited investor status, but everybody can play alongside the same way. The SEC loves it so that people are treated the exact same. Investor A doesn't get a perk that investor B does. So it's the same thing for an interval fund. In that fund, the way that it works is somebody can come in, they are buying basically stock. That stock appreciates over time. And then with that appreciation, they can buy, sell, and trade their shares on demand, whether a secondaries platform where they're just trading peer-to-peer, or there's something called a redemption period where literally the company will actually buy back the shares from those individuals semi-annually. And so what that allows is it allows people who aren't familiar with the operations of the sports space to still make an investment, let it grow on the net asset value of the shares, and then exit strategically.
Got it. Really quick here. What is the timeline or the turnaround to get your cash back? So say, for example, most people, minimum investment on a syndication is $100,000 and it's a 5 to 7 year projection, right? And then they say, roughly, I don't know, 12 to 20% return on investment, depending, right? There's that's broad. Can you just give us the stats on what it would be like in a fund like yours?
Yeah, I'll give you industry first. If you look at industry overall, like I said, it's outperformed the markets for years. You're generally going to see PE equivalent type returns. So you're going to see north of 25, 27, 30% as far as how the money grows. So it's a very good, stable asset class. The other part of this is it's relatively recession proof. I always use the kind of caveat, air quotes, relatively. But the reason being is because if you think about sports, it's even during COVID, people may not have been in the stands, but they're buying memorabilia. Right now, people are in the stands. So regardless of where things are at for the called the disposable income, sports is something that unites everybody, and people do pay into it. So it's a very stable asset class. And the same thing goes for real estate properties around it, right? I mean, so if you can have real estate next to sports, you own a restaurant area, you own a multifamily complex, you own a series again of STRs around a ski hill. It always is going to cash flow. I mean, it's a big deal. So now, and when you do those, traditionally, you're going to see a 5 or a 10-year lockup. And that was something that we had a problem with. And that's exactly why we made our fund the way that we did, is working again with athletes and retail investors. If you lock up somebody's cash for 10 years, and like I said, they're only in sport for 2.5 years, and then they're done, there's some big malalignment there. They need to have some liquidity options. So to my knowledge, we are the first group to do this, so for us, like I said, you can trade on demand. It's typically a 1-year, 12-month hold on shares. And then after that, you can trade on demand. And then the redemption periods are semi-annually. So twice a year, you basically get this window where you can change your entire position. You can get your money back out.
Wow.
Got it. So Nick, does this work like the funds that we understand is like if you're, and the difference, part of the difference between a fund and a syndication, where it's like, Ryan and I have raised capital for both of these. We currently have a $30 million fund going on in Arizona for a ground up development project. And the fund is then we're part of the GP team. Now the operational team has a say on, which properties they're going to pull into the fund. Whereas the syndication model, it's like you're buying into the team, but also this is the specific asset, this specific property. So when somebody says, hey, Nick, I want to give you $500,000, or I don't know what your minimum is, $100,000, does then your operational team then go decide specifically what sector they put those funds in, or is there like a decision to be made from the retail investor side of the LP, like, hey, I want my money in this sort of one of the classes? And hopefully I'm articulating that correctly, but I'm curious.
Yeah, you are. That's a great question. So the way that we have our fund section is it is a blind pool. So because we know the business of sport, we're going to know which one, whether it's media and broadcasting, whether it's real estate around it, whether it's sports tech, we will allocate based on where the market goes and how deal flow is coming in. Because based on the time of year, you will see different inflection points based on type of sport, depending on the recreation of sport versus the professional sport. So think of like a pickleball area versus, an NFL team, right? Polar opposites. And that's something where we know the business of sport and can kind of decide where things go. We do also do kind of like you said, that syndication model where we're able to pull people in. Generally speaking, though, that's going to be your high net worth, ultra high net worth folks because they know what they're getting into. It's $1 million plus for a check to play. And so those are like co-investments where we will bring people aside and have them do that.
So Nick, let me ask you this. People listen to this episode, right? And if you're just a normal guy like Corey and I, we love sports. We love investing. We love building generational wealth. It's perfect to have you on, dude. Like we literally just watched the John Bones fight. I just watched the Jake Paul fight. You can call that what it is. I won't go there. But I'm just saying, like it's so easy to have these conversations because we're talking about it with our boys all the time. And like, it just feels natural. And the natural thing for me is like, dude, this sounds awesome, right? I'm going to be around the Thanksgiving table, people talking crypto, talking real estate, this is just a cool new conversation piece. And I'd imagine some people, that we run in circles with and just Corey and I, eventually this might be something we want to do. So can you take it down to someone that listens to the podcast or some, average Joe that would like that maybe is not an ex-athlete on a pro side, right? They just want to get involved. What's the minimum investment? Do you guys change have multiple, I guess, funds going on a trajectory of time between like 3 to 5 years? I know you mentioned it changes a lot throughout the year what you guys invest in, but I'm just curious, like sometimes there's a raise, then it's done, and then you move on to the next. So kind of give us the whole wheelhouse and how this thing works and how we could potentially be involved or people we know.
Yeah, appreciate that. So our holding company that basically as like bringing it back to the syndication versus fund model, our holding company is basically the GP stakes where we own in our interval fund. We have an RAA that basically is going to help and kind of run and foster the development and do the management of that interval fund. So that right now is closed. So that's for the accredited investor only. For the ones that are the accredited and non-accredited investor coming into the interval fund, believe it or not, the stock and the classes are the exact same, and all you need is $500 to play. So literally thinking of it just like you were to go on the NYSE, buy, sell, and trade stocks, like exact same scenario, except in a private circuit. So talking around the dinner table, I think this is kind of the fun piece for someone to say, oh yeah, you know what? I'm participating in the fund where, I'm investing alongside some of the biggest names in sports. How cool would it be to say, we own in XYZ team, or say, hey, you know what? You picked up that hockey stick. I own the company. I own a part of that company that does that hockey stick, right? So it's ability to say, instead of saying that you're paying into the system, oh, my kid's got to go to a hockey game. My kid has to go to, a JV volleyball tournament. It's like, oh, I actually own in a fund that owns that net. This is pretty cool watching my kid play on it now.
It's really
That's
cool.
awesome.
It's I guess it's so funny to me because things like when Robinhood popped up, it just made stock investing so easy for the natural person. And then same with Coinbase to get into crypto and things. It just becomes so accessible. So when you talk about real estate, it's a little bit more complex to get, there's a lot of documents that need to be filled out. You can do a REIT and things like that, and people can go online, but to get into the bigger deals and get a nicer chunk, it's just a different ballgame. So I'm curious, you mentioned potentially like 30% returns. What is the average, for example, let's say, you could have a minimum of $500, but maybe you wanted to put in $10,000 or something like that. What could you expect on a yearly return? Roughly, I know it probably changes, but maybe like an average. And then are you telling me that is it twice a year you can pull out your cash, or is it whenever you want? Is it just like a free, you can sell shares back and forth?
So good questions, and this is getting deep on how the sausage is made. So please feel free to tell me to re-say some of this if need be. But think of it just like if you were to go buy stock on the NYSE. Same thing. If you want to trade, there's apps and abilities for you to do that. Same thing here. However, you obviously do want to let your stock mature because there will be ebbs and flows. So we do this entire calculation on the NAV, so the net asset value of the fund. So as we put money to work, you're going to see that value appreciate over time. You're also going to see some inflection points where they go up and down just because of seasonality, right? Let's say we own an equipment bag company, and yet now we're going into summer. Naturally, there's going to be less purchases, so the stock's going to go down a little bit. I mean, it's pretty typical, right? Pretty easy math on that side. So the general population will be able to see that and get it. So now, if you look at kind of these redemption periods, the first one is you can trade peer-to-peer on demand anytime. So let's say you have that $10,000. Let's say that it matured, and let's say now you have $13,000, right? And you're like, actually, I want to take my kids to Disney. Cool. You can trade peer-to-peer and say, I want to sell $3,000 of my stock. Leave the principal into work. I'm going to take it back, play with house money type thing, right? You can say, all right, I'm going to pull out that $3,000. Somebody can peer-to-peer buy it, and off you run. There obviously are I'm way oversimplifying this. There are filings. There's a portal to do this and some legalities there, but it is all point and click so that somebody can do this at any time. So now, and then the redemption period, that's where they're going back and forth to the actual fund itself. So that's our RAA, that's our fund managers. What's interesting is, because this is an open-ended fund, people can come in and out and change their position forever. So our goal by the end of 2026 is to have this to be $1 billion assets management or beyond. So think of this going to $1 billion, $3 billion, $5 billion, and keep growing. So you're going to have a lot of people in there that you can trade back and forth with. And then at the same time, the way that you actually go to the redemption periods for the company is there's a cap. So there can never be a run on the fund. So what that means is, let's say you're in that redemption period and someone's like, I have that 13,000. I just want to pull all of it out because I'm going to go on a big trip with my family, right? So you can do that. The way that it works is the fund has a 5% cap and it's first come, first serve. So as long as the fund is under its 5% aggregate cap, you can liquidate however you want. So it's just done pro rata, basically in a line of whoever says that they want to liquidate.
Got it. Last one for me, and I'm sorry to kind of hijack this. I'm just so intrigued because I'm just doing a bunch of different. I'm like forecasting my future and where I want to deploy my cash, right? Because we have a lot of syndications that are maturing. They're either going to refi or sell, and we're going to get some cash back, right? So I like playing in different fields to diversify a bit, and this is fun. Do you view this as a long-term play? And there's the reason I ask this is a lot of people are out there saying, buy and hold forever, right? When you're buying into something, save it for 30 years. There's other options traders where they go back and forth daily. So what type of fund is this? Is it more like, hey, here's my 10 grand. I'm just going to close my eyes. And you mentioned this thing's going to continue to scale 1 billion, 2 billion, 3 billion. As this grows, am I better off just leaving it in for a long period of time? Or is it one of those type of things where, what's coming into the mix is going to change? Maybe I like reallocate my dollars. I'm just kind of curious on the strategy behind the money that's deployed.
Oh, that's a great question. I would say you should treat this the same as kind of any other stock that you're going to see. So I would do it that same way. But luckily, again, this being a lot more stable as far as returns and the volatility of the asset itself going up and down, you're going to generally see it, even with some ebb and flows, continue to rise. So I would say it's going to be a personal preference on, as you said, diversification, right? I love my overall thesis is protect the principal and then let it grow from there, right? If you can let that sucker keep compounding, let it compound as long as you possibly can. Pull things out to maximize your deductions, put it into a trust. Pull things out to maximize what you can gift to your kids every year, put it in a scholarship fund, right? Keep moving money around, keep it active. But I would absolutely say you can grow and hold and let it grow as patient capital.
Got it. Cool, Nick. This is awesome, man. I think we're always looking to bring alternative investment strategies, to our audience, especially people that are listening to our podcast, who are maybe making money and they don't think they have time to focus on real estate. They can either do the passive real estate or they have alternative investment funds. I'm very curious, going back a little bit to the mindset behind this, about high performers. When you're an MMA fighter, you're giving your entire time, energy, and effort into not getting hurt, right? And winning, right? Like that is there's nothing else you can think about. I'm curious about the parallel that you see between doing that and then switching it to entrepreneurship, because if I'm guessing, you as an MMA fighter probably had no clue that you're going to be running these multi-million, I don't know, over $1 billion managed assets in the future, right? So like, how did you parallel the high performance of MMA to the high performance of being an entrepreneur?
I mean, in short, not to be cocky about it, but I just don't lose. So it's one of those where, you know what, it's just absolute drive and driven to do it. And really what I guess my calling is to try and allow people to try and have some of that same courage and kind of, I guess, feed off of my energy. And what I can do is just provide access and expose them to it. So for me, there is no difference between, being a professional fighter and being an entrepreneur. You're going to get hits on the daily. Like, it's going to be good, it's going to be bad. There's a flurry of punches, and there's going to be days where you just got to lick your wounds, and then you just got to get back up and do it again. So in the grand scheme of things, it's always making sure that you're continuing. You're always waking up the next day and being better than you were the day before. It's making sure that you're acknowledging where you failed and how do you learn from that and keep growing it. So regardless if that's losses in the market or a real estate investment that didn't work so well in the flip, you uncovered a lot when you started, putting a shovel or putting a hammer through walls. There's always a learning curve. And it's no different in a professional sport than it is in the business industry. Just connecting the dots makes it so that, frankly, maybe I have a little bit more drive than some people, but it doesn't mean they can't do things differently.
Well, Nick, let's talk about the leadership and culture aspect of that, because there is there's one thing to say that you don't lose, and I believe you, by the way. So because of how confidently you say it, but there's an entrepreneurial mind that is not everyone has, and in order to build leadership teams and culture within your company, you have to pull that winning out of everyone that works for you. And that's, from my experience, I don't run a company that has a lot of employees, but from everyone that I've talked to, culture and leadership and building teams is probably the hardest thing to do, to hire and keep talent. I'm curious about, how do you foster a positive culture? How do you bring out the MMA fighter and the entrepreneur and the people that are not MMA fighters and not entrepreneurs?
I wish I could provide more sage advice to this one, because I think this is kind of a growing curve that, frankly, I need to get better at myself. I think that—
Who doesn't?
Yeah, I think that everybody can do better for people around them and continue to kind of foster their growth. For me, we have a few dozen employees, and really we treat this as a locker room, that we are united under one mission, one vision, and that's what we're pushing. We all have different roles. The quarterback isn't also the wide receiver. The wide receiver isn't also the lineman, right? Like, we have different roles to play, and we're a complementing team that go through. I think it really comes down to inspiring people based on what they're passionate about and where their skill set is. Because just because, like me, you don't have to be an MMA fighter and, have this crazy drive and energy to be able to, be successful. You can look at it and say, I'm really passionate about helping somebody flip their home, right? And so you can work within doing flips. So you just need to find that super why. And then you need to take that why and then cascade it down to the entire team. So there's a North Star for them to unite to. And if you have the North Star connected to each person's individual why, you're going to have a really successful team pushing things forward.
I love it, man. Thank you for that. I have a couple questions for you. One of them, I guess I'll start here. We had a couple other gentlemen that were pro athletes on the show, and specifically in the NFL. And I asked this question because I'm so curious to take on it. We always hear that if people are going out and they're having a couple drinks, they have someone that they can call on speed dial, right? And it's going to come pick them up and like they're taken care of. And then I asked the question a couple of times to say like, hey, do you guys have a person within the organization that can help you manage your money? You're a 20-year-old, you get drafted. I mean, mid 20s, whatever, and you get a couple $1,000,000, or even the minimum is multiple hundreds of thousands, right? And you had no money and now you have all this money, and how to manage it and what to invest it in. So my question for you is, what are your thoughts on, what are your thoughts? Like, where do you guys come into play? And because you mentioned like the average timetable for someone to be in the league or a league is roughly 2 to 3 years, and then they're done. So do you come in as a consultant in a way, or is it just your operation of the fund? I'm wondering if you have multiple arms of people to kind of like bridge the gap, because I think a lot of people get lost.
Financial literacy and financial education are a very big deal. I mean, we see it right now with like NIL deals for athletes, right? So there's a gentleman, I can't remember who it is off the top of my head, but he got an NIL deal where he had a sponsorship from a private jet company. It's fantastic. But you know what? Those flights don't mean anything to Uncle Sam other than they're a dollar amount. They're an asset, and you will pay taxes on them, regardless if you receive cash or not. So understanding that and financially being savvy of what you should do is a big deal. And that goes for athletes, that goes for anybody who's going to be out there. And you need to have a team and somebody you can trust to help you with financial education. We live in a world where you can jump online and you can research just about anything, right? I mean, there's going to be some spammy things in there, but you're generally speaking, you can educate yourself. If you don't feel confident educating yourself, you don't have time, you don't have the drive to do it, you got to hire somebody. If you can hire somebody to do it, you're going to be way better off. And so for us, we take that to heart. So our entire organization, to kind of give you a thumbnail sketch of it, is we have our holding company, which is really where we kind of birth all of our new ideas. Underneath the holding company, we have an RAA. That RAA provides financial education services, financial literacy. We work with some of the leagues and teams to kind of help foster development of their players. But we do that for a general population as well. It's literally kind of our funnel to get people not to our assets necessarily, but funneling them to a place where they feel comfortable controlling their own wealth and taking charge of generational wealth for themselves. And so our RAA takes care of that. Underneath our RAA, we also have a management company where we then go and help kind of foster the development of our assets and improve their bottom line. But both those two things are interconnected together. And the reason why that's important is our RAA provides the financial literacy, and then we also provide the operations components. People can see operations in action. So they know, here's how to manage my money. I'm being educated about it. Here's to put it into practice. And I think if you have that, any group that you work with, if you have those pillars of where you can learn, you can participate and put into action, it's gonna be a lot more successful.
Yeah, it's huge. I think it's so necessary too. And I think rather than just putting someone into this new world of alternative investments, even though they've played in sports, they understand sports, and it sounds sexy in a way too, right? They're like, oh, the game that I've played for, I understand that there's different things that I can invest in. It sounds amazing to invest in the real estate around the stadium, to invest in the stadium, concessions, the sportswear, like all this stuff, right? Anyone that understands sports, like this makes sense. I get it. But if you don't know how to manage your own financial house, how can you start dipping into the unconventional pool of this? And I think it's really important. That's why I was so curious, the arms of the organization, because a lot of people will see these things and they'll just blindly invest in them. They'll be like, okay, this sounds great. But if there's no education piece, there's no really guiding principle. So the SEC can do their best to kind of make sure that you're following the rules. But for the average person, whether you're an ex-pro athlete or just someone that's interested in this, you need that educational piece. It's huge. So kudos to you guys for doing that, because I think it's so important. It helps funnel people, whether you know it or not, and whether that's a goal or not, to your assets, but also gives them the ability to spread their wings and invest in other things and just kind of build that generational wealth for their family. So it's
There's
great
been
stuff.
plenty of times where we've had potential investors and talked to them because we take financial and fiducial responsibility very seriously. So being a fiduciary for the company, I want to make sure that I'm bringing the right people in at the right time. And I've had LPs come up and say, "Hey, I want to put in 500,000." I'm like, "No, absolutely not." Like based on exactly what you're trying to do for generational wealth and how much you have in the bank, no. Like I don't want to put your money in here. So I mean, I think it's responsible to tell them when they shouldn't, how to help them, guide them. It's a big deal.
So last one for me on this is say someone is interested. I'm just thinking from looking from the outside in and not just in the fund, but just to get educated. Do you guys, is it like a financial advisor type service? Would someone just go to your company, reach out to one of you guys and then get booked with someone and then they get brought through the roadmap, if you will, or the timeline of eventually investing in the alternative investments? How does it all work?
That's exactly right. So if they want to engage with us, so right now we have a pretty big LinkedIn presence and an online presence. Folks can join, inquire there. We are launching a slew of services come January onward. So right now it'd be good to kind of get on a waiting list, make sure that we have your contact information, and we can help out from there. There's also a lot of resources out there just in the general public that you can look at. Bloomberg has put out quite a few. CNBC has talked about the sports asset class. So to kind of level up and know, all right, if let's say somebody's specialty is in real estate, and if you want to look at how to connect that to sports adjacencies, there's a lot out there in us. CSNBC had a great article that's out there.
Okay, cool.
Awesome. So as we wind down the show here, Nick, I like to get a little bit philosophical with you on kind of you mentioned the why and having your team members or, you have a passion and a purpose. And I don't think that comes from nowhere, right? I think it comes from somewhere. And I'm curious about your why. And you say you're driven, and I can tell. And Ryan and I like to think we are too. But there's something underlying about it and the reason behind it. You don't just have $1 billion under management, and you don't just have a successful career. I don't know how old you are. I'm guessing in your 30s or 40s, right?
Yep.
Like, so
late 30s.
Late 30s, right? So like, where do you think it comes from? Like, what gets you out of bed every morning? Like, why do you do what you do?
I think there's a combination of two things that have kind of led this for me. Number one is, I said this earlier, is I've had some people that have opened doors for me that has absolutely been fantastic. And so knowing how that felt and how that has put my career in this trajectory, I always want to give back and do the same for others. So that's just kind of a philosophical, put a badge out there that I kind of want to open doors for others and help them. I mean, my why is absolutely my family. And I think that everybody needs to have a why that they're attaching to. For me, I think I could tell you that I probably wandered blind and dumb, looking as a kid, thinking he was going to play in the NFL and then going into MMA and kind of shooting from the hip as I go. And, one day really kind of looked at the smarts to say, there's more to this. And so I'll say, getting married, my daughter's now 9, having her was a big deal in my life at that time. And so forming that why of, I want them to want for nothing, but have a drive to earn everything. So if they want for nothing, I need to be able to provide for them. But for them to want, it needs to be led by example. They need to see me work. They need to see me put practices into action. And then those two things together, hopefully, if I do this right, is exactly why they'll inherit, hopefully, their skills to take this forward and hopefully cash to make it happen.
I think this is such an interesting topic. And we don't have too much time left, but I want to ask you about this because we got great answers. We haven't asked this to everyone, but there was a quote that I heard recently, and it's famous. I don't know who said it, but it's like I've said it on a podcast a while ago, but it's like my grandfather walked to work. My father had a Toyota. I drive a Mercedes, and my kid will be in a Lamborghini, and then their kid will walk to work. Kind of like how do you balance? And because I'm only bringing this up because you mentioned your daughter. How do you balance trying to become super wealthy and giving giving a life to your daughter without actually giving her everything that she needs, and leaving some on the table so that she doesn't have to work for it? And that kind of question came out of just some corner of my brain, so it didn't come out exactly how I wanted to, but I think you get my point. Rye has a daughter. I will be starting a family in the future. And I think about that. I'm like, how do you create non-spoiled kids? And you've had success in your own right. And I kind of put you on the spot there, but I'm just curious if you have an opinion since you brought up your why.
Oh man, that's something that I've struggled with for a long time, and I don't think. I mean, ask me again if we do a podcast again in maybe 20 years. Hopefully, I'll have a better answer for you. But I would say, I think it all comes from actually doing the work, right? So if I'm actually the one that's doing it and showcasing it to my kids why we're doing, that's a big deal. I'll also just openly share that, like, so for my kids and the trust that I have set up for my kids, they don't get anything. The way that it works is if they want to open up a business, they can pitch the trustee and then maybe they'll get a check afterwards. So literally to a point of, I don't want there to be a single trust fund baby in my family line. I want, so again, they don't have to, but I want them to earn it. And I want them to have the desire to earn it. So for me, it's really instilling to them that everything has a value. The most valuable thing is time. And if I can teach them to utilize their time in the right way, money's just a tool. It provides freedom for things that are financial. So really, at the end of the day, they will inherit the tool the way that they should to if they do it right. But first of all, they need to make sure that they're doing the right thing, putting in the work and managing their time. And I think that's a hell of a lot better way to do it.
How's that for an answer, Corey?
That was great. I didn't know I was like, before we got started, somebody messaged us, hey, what are the questions you're going to ask Nick? And I didn't send this one. So I really put him on the spot, but I love that answer.
Way to go.
Thank you.
No, it's good. I love it.
I never look at the questions anyway. I always want to shoot from the hip and be.
I was about to say, there's no way you're reading the questions. Like, even if we set up, not you personally, but just in general, like I think about us going on the shows, you'll scan them, but like there's it's fun to have an outline, but it's firing off the hip and asking these questions in real time is the best, right? Just learning about you, getting to know you in the hour. That's what makes it so fun. I love that you have a 9-year-old daughter. Mine's only 18 months, so I got a lot of catching up to do, but I don't think it was a fair question either way. I'm like, you're just learning. She's not even in her teens yet, like there's so many things. So it's a loaded question. You did that's a great job answering it. I won't put you on the spot for your family, but I'm so curious because once again, I'm going to go bring it back to the athlete, high performer. Dude, you're doing you're living multiple lives. You a former pro athlete, you're now helping people manage their money. You're also running a company that is in alternative investments, helping people, as they kind of expand out of their career or becoming like the top of the echelon in sports and having to become a normal person again. And how do you balance that? And how do you balance your money? And I don't say like normal person, but you get what I'm saying. It's like at some point you're at the top, and then life hits you. You lose. It just hit me when you're like, you lose the locker room, you lose your boys, you lose the some of the privileges that you have. I know it's like a fraternity in the NFL and I'm bringing it to the NFL because that's just where my brain's going, but I'm sure MMA is very similar in that aspect. But my question is for you, when you were kind of pacing your way through your MMA career, right? And you're at the top of your game. At some point you realized this isn't forever. I got to pivot. Can you take us through the moment or like your where your brain was at and how you built a roadmap for yourself to say, okay, I am going to go forge my new path this way because it's something I'm interested in, because I have a skill set. A lot of people don't know where to go from that point. And you see the traditional thing we hear all the time is for the NFL guys, they just go into broadcasting. No, like 5 of them go in there, like the top 5 names. Everybody else, like I always wonder, I'm like, what do they do? Are they going to are they living off the cash? Did they invest enough where they can pull, just live off the cash or the interest that comes off of their investments? Or are they buying laundromats? Are they buying real estate? Are they whatever? Like, I'm so curious on what people are doing. So take us through, you already took us through your whole journey, but like, how the heck did you land with CVP? And did you know that it was going to evolve there? Or kind of where did you go in your mind?
No, I had honestly no idea, to be honest. And I think it all has kind of been, it has been because of doors open for me being smart enough to know when to walk through them and putting the building blocks in front of me. And so I'll take you back. I think one of the aha moments for me was in my MMA career, and I had it was a very good fight, went fantastic. I won, but I will tell you, I definitely didn't look like I won. My wife was not married to me at the time, and I looked at her and she looked terrified. And I was like, that's right there why this is not going to work forever. Like at some point, and that's in the midst of like celebrating, the fight went great, I won, here we go. And just that look was just enough to say, this is not going to last forever. People have it a whole bunch of different ways, whether they lose, they get injured. Regardless, that transition is hard because, as you said, like you're giving up the locker room, you're giving up the fraternity, you're giving up, a lot of the people that are around you. I can count on one hand how many people from my MMA career I still talk to today, which is sad, but it is what it is.
Mm-hmm.
And I'll tell you, so that was the aha moment for me. And because of kind of my history of injuries and looking at that, in my passion for athletics, it made sense to kind of follow how to improve the human condition. How does it make sense to look at biology and physiology and help people? And so I've always kind of had this shepherd type mentality of, I got to bring others around me. And so that was really how I transitioned into physiology. From there, I started, like I said, kind of looking at where does physiology branch into. I'll tell you that I've had quite a few losses, from losing in MMA to I've had with a company that closed. Literally took myself to almost personal bankruptcy at that point. So literally going from, what's this check going to do? Is it going to bounce? Or is it going to feed the dog? Or is it going to feed me? I don't know. Let's see what happens, right? All the way to then managing it appropriately and understanding this is how you run a company. This is what you do. This is how the company is not to be ran. All right, we learned again. Here's what you do. So it's that battle tested and just resilient to always get back up, right?
Yep.
And so making it so that I keep getting back up, that has really brought it to this place of where CVP is now. And so for me, working in sports, athletics, I'd say both buckets the same, but sports, medicine, and real estate hospitality, this is kind of the culmination of all that. And I realize I'm still late 30s saying, hey, this is the culmination of my career, but really this is the spot that allows me to provide something in furtherance of my North Star, my personal mission, as well as give back, which is pretty rare to find that.
Yeah, it is. I think it's so interesting. You're parlaying your skill sets and your interests and your passions and what you're great at. It's so that when you find, I guess it's where passion meets purpose at some point. And I don't know if you felt
Right.
that, but that's what Corey and I always talk about. It's like, okay, when we hit that intersection, that's when we've made it, right? Like no dollar amount really is going to make you feel like you made it. Maybe it will, but it's a false summit, right? Then it's the next thing and the next thing. It's like, what gets you excited to get out of bed every morning to do what you do and like throw off the sheets and just fly out the door, right? Like that's exciting. And then helping other people is kind of what we found is when we're getting the DMs like, hey, you changed my life, or I started this business, I invested in this property and I'm killing it. Like that's so cool, dog. We're like, whoa, that's more than any dollar. If that person paid us $5,000 or something, like that's not going to get us excited as much as them changing their entire life and feeling like we had a little piece to their story. Cause we all know this time's short, the world's changing in a million different ways, but it's just so interesting. So I'm glad you found all of this like intersecting, you're saying we mentioned 30s is super young, dude. Like think about that. You have so much living to do. This thing could pivot a million different ways. But the last question for me, and this is just a selfish question. It's not philosophical. I just really want to know this because I know a little bit about the NFL, but this is the MMA side thing. So, and I think this is for the MMA fan that's listening, this will be cool. I should probably know this, but I don't. So what I've been told recently is like the payouts for fights, right? You see the what they call it, the purse, right?
Yep.
I'm like, wow, some of them are crazy. It just depends. Like mostly it's UFC what people are looking at. And if it's one of the top fighters, they're going for the belt and you see it's a big payout. Is it similar to golf where there are sponsors that come in that need that like, let's just say it's a $2 million purse. Is that money getting extrapolated out by a bunch of different people before it comes to your pockets, including Uncle Sam? And if so, could you maybe break that down just for the average fan?
100%. That's right. So, it depends on where you're at because it's very much like if you look at the hundreds of thousands of kids. So take this to football because everyone gets that. Hundreds of thousands of kids that play football, right? Take it down to high school. High school athletes, there's everybody looks to who the state champs are. The state champs then go to college. Everybody there's an all-star in college. Everybody was a star at their school. Then you go to the NFL. They're 1% of all those stars that are there. So you're talking about a very top, the pyramid is a long ways to get up there. And so the payouts are there, but you're looking for your financial advisor, your agent, the media deals. It all kind of chips away really quickly. MMA is the exact same way, except for there's even kind of a bigger hitch in there. So MMA, when you're starting kind of in the amateur, everybody has seen, a local casino or something is going to host a fight night, right? So usually you get paid to show up and walk through the door, then you get paid to win. So because obviously they want to stimulate a good fight, they don't want anybody to roll over. So that's the point of it, is motivation. And they use money as a motivator to do that. that's pretty continuous all the way up through some pretty high levels. But you go from, literally state fairs, casinos, to then regional competitions, to then national scale, to then the big shows, like UFC, everybody knows, but there's Bellator, there's a lot of different shows. And before Dana White bought a lot of them, there was the WEC, King of the Cage, and some of those others, and they were fantastic. But as you go, fights fighters, if you're in the lower circuits, you're going to have many fights a year, potentially one a month. I mean, it can be insane. So then you go up to the professional circuit, you maybe have 1 to 3 fights a year. And although, yes, you get paid, if you lose, your payment is about cut in half. So to put in perspective, I'll tell you, just openly, at kind of the peak of my career, I was taking a handful of fights a year, probably about 3 to 4 a year. And that was even probably too much. So you basically would do camp for about 10 to 12 weeks. And in that, probably the payout at the end, I'd probably make a couple $100,000 by the end of the year. So with that couple $100,000 though, I'd be paying out again. Uncle Sam, it's a 1099. It comes through the team. I got to pay team dues. I have to do everything down the list. I probably was making, to beat my body up, less than $80,000 take home per year. And so, and that's at a pretty high level where, I was not in the UFC, but I fought in some very big circuits. I took 5th in the world of jiu-jitsu. I was in the top 100 at one point in my career. So, I was right up there, and it doesn't pay as well as you'd think.
People only see the top guys, right? And it's like that in anything. I mean, like I was just listening to an article today. Daniel Jones just got released by the Giants, and he made $30 million a year for X amount of years. And like, that's just an example of somebody who, as at the top of the NFL, but how many guys are going practice squad to practice squad that are like, NFL not for long, that aren't going to make it. And it's similar in any sport. The guys out of the top 100 of golf or whatever, they're paying their way to play in all these tournaments, and they got to win to feed their family. So it's the competition of sports, which is amazing. But anyway, Nick, this has been awesome. I love getting to know you. I love chatting with you. I think, you're on to something for sure. If people want to learn more about you, they want to potentially network, maybe even invest, what's the best way for people to get in touch with you?
Well, thank you so much. They can reach out to Champion Venture Partners, check us out online, or check us out on LinkedIn, and I'm connected right there.
Awesome, man. Appreciate it. This is great. It's been nice to meet you today, and we appreciate your time.
Yeah, thank you so much for having me. This is fantastic.
It was our pleasure, man. Thanks so much.